As Trump tariffs is bringing down the market. Today, I'm going to be telling you guys more about tariffs, what they are, what is going on, and how is it affecting the market. Welcome to NextGen Wealth Tips. On this channel, I help you better your stock portfolio, give you guys ideas on what stocks to look at, how to get better at trading, and tell you guys the current news and events that is going on with the overall stock market. I also help you become financially stable and help you build your knowledge on finances because I feel like that's not spreaded too much. With that being said, what are tariffs? So, tariffs is a tax imposed by a government on imported goods aimed at making foreign products more expensive to protect domestic industries. So, basically, Trump's main reason for imposing these tariffs is to pressure Mexico and Canada in taking stronger actions against drug trafficking, particularly fentanyl, which has been a major issue in the US. He initially delayed the tariffs by a month after both countries agreed to new enforcement measures, but when he felt they didn't go far enough, he moved forward with the 25% tariffs recently on March 4th. As we've seen, the market did indeed get beaten up by it. We're going to be talking more about how it's affecting the market, what to expect. But beyond the drug related reasoning, Trump has long supported tariffs as a way to protect American companies and reduce trade deficits. He sees them as a tool to bring jobs back in the US and strengthen the domestic industries. With that being said, we are getting kind of like the outlook on tariffs, honestly. We're just trying to get people to make everything in the US, and with us making more products in the US is going to open up more jobs for people like Apple. Recently we seen with a $500 billion deal to kind of open up their own factories because they're mainly made in China. It is cheaper to make in China, but with these tariffs it doesn't really make it cheaper. And if they make them here, they can open up way more jobs, especially that $500 billion deal by Apple. And we're seeing other companies too. He also has that gold card too, bringing other companies in for $5 million, which is kind of insane, but it's going to bring more jobs and more money into the US overall. However, critics argue that these tariffs could lead to inflation, hurt businesses reliant on imports, and spark economic retaliation from Canada and Mexico. With that being said, his first term, as we've seen, the market did dip like 5 to 10% in his first term being president. And it kind of worked out a little bit better. But now that we've seen recently, other countries are actually putting tariffs on other countries, and we're getting way more retaliation this time around. So his plan is not really working out as planned, as you can see. And with that being said, it's hurting the market a lot. This is the monthly overall. It kind of started like last month a little bit. With that being said, we have a lot of tech stocks down, especially stocks like Amazon, Walmart, Apple, Nvidia. All of these stocks are hurting because they're going to be hurt on the import tax. And with that being said, the daily and the weekly were down way more, with more sectors down, like banks, stuff like that. With that being said, we are in that downward trend where a lot of investors are uncertain on how the economy is going to be looking. So keep that in your mind and on your radar. That being said, let's talk about how it's affecting us. So first off, the consumer, the prices are going to be higher. Tariffs on imported goods are generally led to higher prices for consumers. For example, tariffs on electronics, clothing, and other consumer products have increased cost, which can reduce purchasing power overall and bring down prices or overall profitability for companies and kind of sales overall. With that being said, how are they affecting domestic industries? Protection for certain sectors. So some domestic industries like steel and aluminum have benefited from the reduced foreign competition. This has led to job retention and growth in these sectors. Negative effects on others. Industries that rely on imported materials, such as automotive and other companies, have faced increased cost, which can hurt profitability and lead to job losses. And we have been seeing a lot of companies, laying off workers and their profits kind of already going down. With that being said, many companies have adjusted their supply chains to mitigate with the effects of tariffs. This can lead to increased operational cost and complexity. Trade deficits. So while tariffs are intended to reduce trade deficits, the results have been mixed. In some cases, the trade deficit has widened as retaliatory measures from other countries have limited US exports. So we have some beef with Canada too. So they're kind of coming at us like strong. With that being said, with them coming at us strong, they do have retaliation tariffs. So Canada has responded with a 25% tariffs on $30 billion worth of US goods, with plans to raise that to $125 billion. And they also are talking about cutting energy in April. basically, or energy, but cutting the power to US places. And they're not allowing any companies to make any deals with Canada, any US companies make any deal with Canada. They're actually denying I think $100 million or $100 billion deal with Starlink. With that being said, Canada is a big supplier in energy and not just electricity, oil and stuff like that. So keep that in mind. That can really affect some things too. So that's kind of affecting us. But with that being said, let's talk about some market reactions. So, like I said before on the stock heat map, the stock market is showing a lot of volatility. The uncertainty surrounding tariffs has led to fluctuations in the stock market. Industries directly affected by tariffs, such as manufacturing, have seen more pronounced volatility, and we have been seeing that a lot. If you open up just a separate stock like Nvidia, for example, Nvidia has been moving pretty strong. The recent years for like last year, but now that we're up, we've been up and down, and then we're reaching new lows, and we're kind of going to some support lines and falling below that. And we see that with a bunch of other stocks. I use NVIDIA as an example because everybody looks at NVIDIA. With that being said, we are seeing a lot of volatility in the stock market. But with that being said, I honestly am very, very pumped to see kind of the end point of this. So after tariffs, I think it might be a little bit longer, like a few months of the volatility in the market. But I think once we start seeing better things for the market, the economy, and everything overall, and maybe if we can fix this tariff issue, and or just let it kind of play out, and then wait until we get the numbers and everything like that, balance out the market can go back green, and we can see what we've seen last year, where the market was just green week after week after week, a constant bullish market. I just honestly recommend having patience. So, some government aid with tariffs. So, in response to negative impact on farmers, the U.S. government has implemented aid programs to support affected sectors in the farming sector. So, that's kind of something on the side that kind of is added in. But with that being said, if you guys want to know the trade deficit, this is what it is right now. As of January 2025, we're at negative $131.4 billion. That was last month. This chart can always change. Just wait until the numbers come out. With that being said, we kind of got good news, but not really good news at all. But basically, there's a meeting with Ford and some other companies that kind of saying that the tariffs aren't really too good. They're kind of complimenting Trump, but then also saying, hey, man, this isn't really a good idea. We're going to be losing a lot of money, maybe losing some jobs. And you know what that means when people lose jobs, they're going to hate them more, stuff like that. But we kind of have a delay for tariffs for 1 month on some vehicles built in North America after a call with the CEOs, as you guys can see, GM, Ford. So we did kind of get some good news with that, but it's only a month tariff. We seen this last time when we seen a month tariff, and then now the tariffs came and the market dipped even more. Honestly, I think the delays is making the market dip even more than it should, because then we get the first dip in the tariffs coming out, and then we get kind of like a relief, and then it comes up just a little bit more, and then we're still kind of bearish, and then the month comes, and then we're even more bearish. So keep that in mind. But with that being said, what is going on? So honestly, man, we got trade wars. So in general, man, the trade war is really going to bring down the market a lot, especially if China comes out with more trade wars and other countries. Right now, we're kind of just seeing the most out of Canada, but in the future, we can probably see even more in the future. And Canada is kind of doing the most. So we kind of really just have to see how that really affects everything. So the tariffs that we kind of have right now, so effective March 4th, after delaying them for a month, over the weekend, he confirmed that Canada and Mexico hadn't done enough to stop drug trafficking. So the 25% tariffs on most Canadian and Mexican imports kicked in. Now Canada has responded with 25% tariffs on the $30 billion, and then in the future, $125 billion, like I said before. Mexico is also preparing its own countermeasurements. So there's a lot of concern about inflation and possible recession. But Trump and his teams are saying that it's all part of the economic transition to get tougher on trade. So keep that in mind. Honestly, like a lot of people are thinking that it's to make deals and stuff like that, but we don't know how long this is going to go, and we really know what's going on in Trump's head. So keep that in mind while trading and having your long term. If you're watching this thinking that your long term is going to die out, don't be too scared. If we get into the charts, if we kind of just look at how the charts have been moving, this is kind of around the tariffs a little bit, and kind of around COVID too, but we dipped down, and then we hit new highs, dip down, hit kind of new highs. We kind of did have another dip, and then we hit new highs, dip down, new highs. I think this one might have been COVID, honestly, but dip down, and then later on we make new highs. This one kind of did take a longer, so just keep in mind that the bigger the dip, the longer it's going to take to rebound. Honestly, like the dip, whenever you have bearish market, you're going to take the elevator down and then the stairs up. So every time you have a dip, it comes up slowly. Dip comes up slowly, dip come up slowly. So don't be too scared if you guys have a long term. I'm holding strong. I did sell out on some just to buy some at a cheaper cost, just ones that I got recently, just to kind of make a little bit of profit and then buy back some more later on when we get a bigger dip. Some of the stocks to look at, I am going to be giving you guys some plays, kind of like stocks to look at certain prices, just because how well they've been moving. If we're in a good market, and this is only if we're in a good market when you start seeing the market go green, but right now I think we're going to sell off a little bit more. With that being said, I'm looking at NVIDIA at that 100, and if we break down lower, dollar cost average, I'm probably going to buy some at $100 flat, because honestly, I think by the end of the year, we can hit that 150 mark and make 50% returns, but at 100 and then down past 100, we can probably see it at 90 maybe, but 90 is going to be kind of rare. But 90, you can even pick up some more at 90, because 90 isn't bad. Another one is Palantir. Palantir's, honestly, we did get some bad news, and the tariffs just brought it down even more, and we're still falling. I think, honestly, Palantir, I'm going to be looking at it at that $60 level once again. And then if we break down even more, that $50 level, people are even saying it's going to hit that 30, but I think I'm going to load up at that $50 level to that $60 level. Tesla, honestly, man, we got the robots and everything. It's kind of hated right now because of Elon Musk and everything that he's doing. So I do recommend having a lot of patience in this one. But I'm going to be looking at Tesla at that 200 level. We can break below that 200, maybe even 150. But if we break below that 200, honestly, I don't know. We might be able to, but it's kind of rare right now. So I'm looking at it below that 200 level first. And then, but if we can break below even more, I'm going to be looking at it lower than that. And then SPY. SPY is just one of those that you want to keep in your long term anyway. ETFs are pretty good to have just because they're just more trusted and more safe. With that being said, I'm looking at it maybe below. I'm going to be looking at SPY maybe at that 550, and maybe even just wait until it just keeps breaking down. SPY I can be a little bit more patient with. I think 550 to that 540. I don't think we're going to break down below that 540 or below 550, but honestly, just having patience, stuff like that. If we can break below that, I'm going to load up. And this is only for long term. If you guys wait a little bit longer, I'm going to make a video on the stock market outlook, and that's where I'm going to be showing you guys the short-term plays for day trades and swing trades. Keep that in mind. Apple, we did have Apple kind of holding strong, and now we're kind of falling today. I'm very interested at the level of either 220 or 200. So keep 220 and 200 on your mind. I think 220 to that 215 is going to be good because we kind of bounced off of it previously. One that I'm looking at right now to kind of load up on is Netflix, man. Honestly, Netflix is a great stock, a great company. Everybody's going to be using Netflix. If competition even comes out, I don't think they can even compete. Netflix has their own series, like only you can only watch on Netflix. It's replacing TV. They're trying to get live sports. Honestly, like this is just a great company. The crazy thing is that we were just trading above the $1,000 and then we broke below it. That's kind of insane to really think about, because we broke 1,000, we were holding it. I think we broke below after earnings, and then we went back above it, and we just been holding that 1,000, and then we broke all the way down to that 800 level, which is kind of insane. So I'm gonna be looking at it at that 800 level and probably even lower than that. But I think maybe look at this level right here, the 825 level, and then if we break below that, we can probably get 800. So I'm be looking at that 825 first, and then if it breaks below that even more, I'm gonna load up definitely on Netflix, but just wait until the bearish trend is down a little bit more. I do recommend waiting for this rally right here. So maybe if we do break below that, look at 765 and then that 720 level. And then, man, I don't think we can break below that 720, but honestly, just have that on your radar. Another one that I'm looking at is kind of like a meme stock, not really, but Intel. Intel has been trading decently. We have been kind of bouncing off that $19 level. If we can see it back at that $19 level and breaking down even lower than that, if it breaks down lower, I don't recommend getting in yet. Just wait until it reaches a low and then buy even when it comes back a little bit. But I think that $19 level is something to look at. And then if it bounces down even more, you can get into that with your long term. But with that being said, thanks for watching the video. Smash the like button, subscribe if you guys are new. I try to get some, displays and stuff like that for you guys. I make videos like this all the time. Have those post notifications on so you guys never miss out. And don't miss out on that stock market outlook video where I'm gonna give you guys better plays for short-term trading, because right now long-term trading just isn't really for you right now. You can always dollar cost average, but honestly, just have your patience and good luck trading. Peace out.